With commercial and development finance markets so volatile, we've invited Iggy Damiani from Global Capital to come back on the show and give us his slant on what to expect. G'day, Iggy.
Hi, mate.
Welcome back.
Thank you.
Okay, we've had the interest rate drop last week. Has it had the desired effect?
It has for Australian families with mortgages. But they're obviously getting a few dollars back on a monthly basis, but realistically we have to ask ourselves, why have interest rates dropped? Now initially the Reserve Bank were putting up interest rates to try and slow the economy down and deal with inflation. But what has happened now is that they've basically put the brakes on the economy, or slammed the brakes on the economy, and the inflation rate is still where it's at, and even more so still creeping up. So the RBA have had to ask themselves, well, do we look after inflation or do we try and preserve some Australian jobs out there? Obviously they've gone for looking after jobs to help the economy keep ticking over, but realistically inflation is not an isolated problem for Australia, it's a worldwide issue at the moment, but it will help consumer confidence, having the interest rates come down, but the real question is how long before consumer confidence turns into consumer activity? That's a real question, especially for developers.
Okay, well, speaking of developers that need some help, Gold Coast-based developers are in a little bit of trouble. Last week, Raptus, this week, City Pacific.
Unfortunately, City Pacific are making headlines for all the wrong reasons. Look, at the moment, they've set up an action group against City Pacific. As we know, their first mortgage fund holds about $1 billion of mum and dad money. They've stopped redeeming deposits, so mum and dads can't access their money at the moment. The company has lost 90% of its share value, so there's been a trading halt there. And what they're up in arms about is the fact that City Pacific are charging the fund a $30 million fee to manage the fund. Now, quite obviously, mum and dad investors are not too happy with the way it's being managed, so they're asking the question, why should you be paying yourself $30 million for the service?
And Australia's first super bank seems like almost a certainty now?
Yeah, look, it looks as though St George are going to take up the offer from Westpac for $18 billion plus. No huge surprise there, purely because of the cost of funds in the wholesale market. We've had Suncorp recently say that it's still very difficult for smaller banks with smaller balance sheets and inferior credit ratings to raise funds at a certain interest rate. So, you know, based on the way the world markets are going at the moment, it's a good idea.
For all your commercial and development finance needs, call Iggy at Global.